October 27, Reuters, Amazon. Com Incorporated, AMZN. Shares skidded as much as 21% after hours on Thursday after it forecast costs might eviscerate its profit for the current quarter, as early holiday marketing does little to boost sales growth and as labor and delivery expenses continue to swell. The news followed similarly huge slide in Meta platform shares, Meta. On Thursday, after the Facebook parent reported late Wednesday costly metaverse bets and the impact of soaring inflation on ad spending, which spooked investors. But Apple earnings on Thursday were a bright spot, with higher-than-expected revenue leaving its shares, Apple, only slightly lower. Read more. Amazon's net sales were $127.1 billion in the third quarter ended September 30, lower than analysts' expectations of $127.46 billion, according to IBS data from Refinitiv. For the holiday quarter, the world's biggest online retailer forecast net sales of between $140 billion and $148 billion versus expectations for $155.15 billion. Read more. Comments Daniel Morgan, Portfolio Manager, Synovus Trust, Atlanta, Georgia. The Amazon and Apple reports showed divergence in terms of the overall health of the consumer. Amazon is down because of their fourth quarter revenue outlook. But then we look at the Apple report and they reported strong growth in a lot of their consumer categories. Their iPhones, Macs, wearables, and services all had positive growth rates. So it seems to me that Apple is in a better position in regards to weathering this slowdown in consumer spending. Amazon came out and reported that they expect fourth quarter revenues to be below expectations and only grow 2% to 8% in this upcoming Christmas season. Going into the holiday season, you would expect the consumer to really ramp up, so that I see a big divergence between Apple and Amazon. That is a huge black cloud on Amazon stock, which gives you the impression they're not as well positioned. Apple is a different model than Amazon. It creates its own products and has a very loyal user base. Amazon is just a conduit for other merchants. Intel was all just cost-cutting. Their client computing, PC unit was better than expected. That was good. They came in and announced this massive cost-cutting, from which you can create growth. They're embracing the moment, realizing that they're not executing and have to realign their business. The street is applauding this cost-cutting agenda they've put together to try to grow earnings again. Daniel Kreiter, Director, FI Strategy, BMO Capital Markets, New York. The sell-off in tech stocks post-earnings indicates that the Fed's restrictive policy is beginning to be felt in the real economy.